Well, extending the unpredictability of 2020, markets charted quite an aggressive course through the third quarter. So obviously we had the sell-off in February and early March as COVID gathered momentum, a remarkably quick recovery in the second quarter. And then in the third quarter, the market just continued its ascent through July and especially in August, with nearly a 10% increase in August, which was quite remarkable. And then all of a sudden, everything kind of rolled over on September 2nd for a couple of weeks. And after that September 2nd peak and the subsequent sell-off, we had a rebound into the end of the quarter. So, we sold off about 10% through September 23rd, and then just turned right around and started rising again. As listeners are probably aware, there has been a continuing debate regarding the cross of ESG and performance. Currently, the Department of Labor is looking to promulgate rules that discourage or prevent ERISA plans from investing in ESG, because you should be focused entirely on returns for plan participants rather than tangential issues such as ESG. But we would just reject that out of hand. I mean, by focusing on ESG, you are indeed focusing on the requirements of your participants. And one fund can't stand for the entire industry, but certainly the Saturna Sustainable Equity Fund, which is its core is around ESG investing, demonstrates that you're most definitely not paying any penalty for ESG considerations in your investment philosophy. So during the third quarter, the Saturna Sustainable Equity Fund returned 11.19%, while the S&P Global 1200, and keep in mind, Saturna Sustainable is a global fund, so that the S&P Global 1200 is a reasonable benchmark, that returned 7.6% versus the 11.19 of the fund. And the MSCI All Country World Index returned 8.25, so nearly 300 basis points ahead of that index during the third quarter alone. Year to date, it's just stunning. Year to date, the fund has gained 13.41%, while the S&P Global 1200 only a gain of 1.2, and the MSCI All Country World Index a gain of only 1.77. So some 1,200 basis points ahead of those benchmarks. So clearly, investors in the Saturna Sustainable Equity Fund are not sacrificing performance, and it entirely is possible to do well while doing good.
The main driver of positive performance in the first quarter for the Sustainable Bond Fund were our positions in U.S. Treasury bonds. However, after the U.S. yield curve experienced a massive shift downward during the first 3 months of the year as investors flew to quality, really the second and the third quarter saw Treasury yields remaining very stable. The returns in the third quarter for the Sustainable Bond Fund were really driven by the recovery of corporate yields and the recovery of foreign currency positions relative to the US dollar, specifically the Mexican peso and the euro.
Performance data quoted herein represents past performance and is no guarantee of future results. Investment return and principal value of an investment will fluctuate so that an investor's shares, when redeemed, may be worth more or less than their original cost. Current performance may be significantly higher or lower than data quoted herein. Performance current to the most recent month end can be obtained by visiting www.saturnasustainable.com or by calling toll-free 1-800-728-8762. Please consider an investment's objectives, risks, charges, and expenses carefully before investing. To obtain this and other important information, which you should carefully consider before investing, about the Saturna Sustainable Funds in a free prospectus or summary prospectus, please visit www.saturnasustainable.com or call 1-800-728-8762.